Nelson Nash's Becoming Your Own Banker is the second most influential book that I've ever read. Stick around today because Anthony and I are going to be sharing our favorite pages from Nelson's book.
Enjoy the episode.
Welcome to the Infinite Wealth Podcast, where we teach clients how to build wealth and create passive income without the risk of Wall Street.
Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Fasso. And today we're diving into Nelson Nash's Becoming Your Own Banker book, and we're going to be sharing our favorite pages with you guys. So stick around. Anthony, you excited for this or what?
Yeah, this should be good. There's some great concepts in here, and I'm excited to be able to share my favorites.
I agree, man. It's been a while since we've gotten into Nelson's book, and some of the stuff that we're going to share with you today comes up often during our meetings. And so I'm excited to highlight some of those for you guys.
One thing I thought was interesting, there were some ideas that I had in my head that I thought were in the book, but maybe they were an actual quote. It was kind of hard to distinction between what was in Nelson's book or maybe what I learned in his seminar or by hanging out with him.
Awesome. Well, you want to kick us off, right? Do you want to share yours?
I'd like you to go first because I've gone first, quite a bit.
Yeah.
I mean, maybe I should go first. On a good roll. No, I'm sorry.
Awesome. I'm excited because to be honest, there was 2 pages that I knew right away, right? When we talked about top 3 or a favorite, I knew the 2 that I was going to share. And then the third one, there were several that were really close. So I'm excited to share these top 2. And then the third one, you guys will have to stick around to find out what that one is.
Okay.
Anthony, you probably know this one, but my favorite page in the entire book is going to be page 45. On page 45 is the page that he lays out the difference between using a CD as collateral and then using the insurance policy and IBC design policy as collateral. And one thing that I thought was interesting as I was going back through this, Anthony, I don't know if you remember, but the CD that he uses in this book, do you remember the interest rate that it was earning?
5%?
5.5. Right. And I remember for years, we used to have to qualify that with clients and be like, hey, listen, right, we know this is high. You can't get it now. Right. But just stick with me. Right. Even if you could, this thing still works. And now we're in the age where, hey, you're earning 5.5% on a high yield savings account. Right. So I thought that was super interesting how the pendulum always kind of swings back. Right.
Good point.
Yeah. But on page 45 for me, this is the page that was actually very moving. And I tell people it pissed me off. When I read page 45, if you go through that, you actually come down to the bottom and you reach the conclusion that using the policy as collateral to make purchases over your lifetime is the single greatest efficiency that you can implement. And so I remember looking at that and getting really mad and having to go back and go through that page several times the first time that I read the book because I thought I misunderstood it, to be honest. And so I went back and I went through that thing. But I'll tell you what, when it finally clicked for me is I looked at page 45. And what's funny is I went and I looked at the premium that Nelson had illustrated on that. It was $5,000. And I remember going down to the bottom of that example and thinking, man, what if I put in 10,000? Right. And I was like, man, right. This is going to be amazing. And so that's what I did. Right. I went out and I actually put 2 policies in place. One was 5,000 on me and one was 5,000 on my wife, Jessica. And those were the first 2 policies that we put in place because you know what? That's what I saw in this book. And I'm like, that's exactly what I want. And so page 45 for me was the page that really moved me, really got me up to speed. And I felt like I really understood infinite banking and how it could benefit myself. So page 45, great read. If you guys haven't read that one in a while, go back and revisit it.
Perfect.
Anthony, what's one of your pages that you enjoyed reading?
One thing I found interesting as I was preparing for this, as we're talking about it, we kind of nerd out on this book quite a bit, and particularly if you're on other IBC guys, like they know what pages each concepts are. And one of my favorites is page 39, which their little blurb where he talks about my thoughts on universal life. And what he talks about is the history of universal lives. Or so there back in the day, there was really whole life. We're kind of like buying life insurance, and then they developed term, more kind of like renting it on a temporary basis. But what had happened in the 80s with the high interest rates, they wanted to be able to compete with other assets. So E.F. Hutton actually came out with the first universal life policy. Now, Cameron, do you remember like the commercials from E.F. Hutton?
No, I'm too young.
Okay, I figured you were,
Yeah.
right? What they used to say is, when E.F. Hutton talks, everybody listens. And I remember those commercials because they would be set in like a fancy, restaurant, real formal restaurant, and everybody's talking, but then E.F. Hutton says something, and then the whole room is silent because everybody wants to listen to what E.F. Hutton says. But what's interesting, when was the last time you heard something from E.F. Hutton?
It's been a while.
It's been a while because they're no longer in business. Okay. And I think it has something to do with the universal life. Okay. And in essence, what universal life is, they take a 1 year term policy, and then they add a side fund. And with straight universal, it's typically tied to an interest rate. But then again, that didn't perform as well. And even Nelson talks in his book where he tried to illustrate those, but they kept on imploding when somebody turned 60 to 70 years old. And imploding means that there wasn't enough cash value, right? That the cost, that 1 year cost of the insurance started to erode the cash value to a point where the cash value was zero, and then thus the policy actually lapsed. So then what the industry came in was variable universal life, which is a 1 year term policy with a side fund of mutual funds. Now, I got exposed to this early, and I learned the hard way the risks in this, because those, not only are there high fees in there, but also when the market goes down, your account can go way down. So I learned that the hard way in 2008. Then it was like, well, now people are losing money. So they come up with a new product called indexed universal life, which again, 1 year term policy, but this time the side fund buys options tied to the market. But again, the problem is with all these universal life, they're built on this 1 year term policy, and those term costs when you're in your 30s and 40s, super cheap. When you're 70s and 80s, super expensive. And so there could be a lot of risk of those policies exploding. And then at the very end, the way that Nelson ends this section, he says, I never sold one of these policies, and I would never buy one. And I do not recommend to use it for the infinite banking concept. So any agent out there who's talking that you can do infinite banking with IULs, you're going to have to point them to page 39, or maybe you might need to send them the book because they probably haven't read it. But you're hearing this from the creator of the infinite banking concept. Do not use IULs for infinite banking.
Well said. Pretty definitive. There's no gray area there.
Yeah.
Awesome. All right. Second page. I knew right away my second page was going to be page 65. And on page 65, the second to last, in the last paragraph, the second to last sentence in there, it states, if you know what's happening, you'll know what to do. Again, that is, man, that's right up there with one of my favorite quotes from this entire book. At that point in the book, Nelson has laid out his whole idea. He started to give examples, and you're starting to realize how important using an infinite banking policy as a foundation for your financing and investing can be. And so he just hammers that home with that statement. And I feel the same way, right? One of the things that I share oftentimes with people when they ask us about infinite banking and how we got into it, one thing I tell them is that if you look at some of the top producers in infinite banking, very, very few of us kind of set out to be advisors.
Good point.
Right? Most of us are really just entrepreneurs or business owners that came across infinite banking and were like, man, this thing works. Other entrepreneurs need to know about it. And so again, once you hear about infinite banking, one is you feel obligated, one, to share it, but also number two is you have this desire to implement it into your life. And so one of my favorite quotes in this book, in addition, on this page, he also shares a couple other nuggets that, to be honest, I'd forgot about until I went looking and preparing for this. But there's two things that I wanted to share with you. Number one is there's a quote in here and it says, no one elevates himself much above the environment in which he operates. Really, really good quote. Anthony has touched on this more previously in one of our podcasts. I won't spend too much time, but everybody knows, right, that if you hang around with five guys that are broke, you're going to be the sixth broke guy, right? And so the community that you're going to find yourself in is absolutely important. And it also goes along with the other point that he makes on this page is, man, he gives us this idea of what it looks like to create wealth over the long term. And he actually lays it out in three different steps. Number one is you have to understand the difference between price versus value. Price is what you pay for something, and the value is what it provides. Everyone understands the price of insurance, but very few people understand the value that comes along with that. And those are the things that we talk about all the time, control and some of those intangibles that's tough to put a price tag on. The other thing they says is go out there and find a coach, find a mentor to whatever you want to be doing. In this instance, he's talking about personal finance, right? But when you go out there and you find a coach, number one, it's going to help you avoid mistakes. You're going to be able to move much faster. And then whatever the process that you're going down is going to be customized to you. So finding a mentor, finding a coach, absolutely vital. And then the third one that he shares in here is get invited or get involved with a wealth club, right? People, right? Everyone is talking about that idea about getting in community. But I wanted to echo it here is because I know that when I first came across infinite banking, I felt like the lone wolf. There was no one that I knew that had any idea about infinite banking, nor was anybody actually practicing it. And so that's one thing I would tell you. If you guys are out there and you're listening to this and you're like, man, seems like a great idea, but I don't know anybody else doing it, call us, right? We've been doing this for a really long time. We've got a great community that we built, and we'd love to get you plugged into it.
Well done, Cam.
Thanks.
You mind if I ask you a follow-up question to that?
I do. Moving on. Just kidding. Go ahead. What do you got?
No, you brought up a good point that most of the IBC people didn't start off as financial planners, right? Why do you think that is?
Well, number one is if you find infinite banking, typically it's not the traditional financial planners are not the ones that are dispensing this information, right? Nor is it the banks and nor is it the insurance companies. What you're going to find is it's typically an entrepreneur out there that found this strategy and is implementing it and is starting to share it. So the traditional avenue of financial advisors learning infinite banking and then sharing it, it's become more common in what I would say in the last 5 years or so. But man, when we first got into it, they absolutely were not sharing it. Nobody had a clue or anything about it. But now as it's gaining popularity, traditional advisors are starting to take a look and trying to figure this thing out for sure.
Oh, cool.
Yeah.
Good take.
Yeah, thanks. All right, Anthony. Share us your second page.
Okay, first of all, Cameron, I saw you taking a look down at my notes, and I appreciate it. No cheating. This isn't high school or college. My second favorite part of the book is something that I actually incorporated during the education process of our clients, and it's page 15, the grocery store example. And what Nelson had laid out there is, let's say, for example, you owned a grocery store and you needed to buy a can of peas for the family. And the question is, where do you shop? Do you shop at your store or do you shop at a competitor's? Most people typically would say, well, I shop at my store. But he takes it a step further and says, okay, you grab that can of peas off the shelf. Do you walk out the front door and buy it? or the back door and steal it? Like, and what's interesting when I ask people that question, I think the default would be to steal it.
Yeah.
Right. And I know when I ask my wife that question, that's exactly what she goes, I'm going to steal it. Right. I'm like, you're so thankful that you're married to a CPA. I did say that, and she did slap me, but
well deserved.
right. But the point he's trying to make is that if you were to buy a can of peas from somewhere else and pay them $1, then you should at least pay the same for the can of peas at your store. And part of the problem we miss is what people might think is, well, it's my store. Again, maybe the golden rule, right? That it's your store, so you can make the rules. But the thing that we're missing is that can of pea that we sell for $1, that's not all profits. We need to take that $1. Maybe we have some expenses as a store, but then we also need to buy another can of peas. Because if we're in the grocery store business, the way that we make money is turning over the peas. The more peas we sell, the more money we're going to make. And when we take peas off the shelf, that's less money that we have to buy. And when we relate it to infinite banking, Cameron, let me explain this to you. In the parable, the store is your policy, and the can of peas of the $1. And what he's trying to hit home. Does it make sense now,
Yes,
Cameron? Makes sense.
It's come together.
Is that if we're going to use some dollars from from wherever we take it, I mean, it doesn't need to be from a policy, but if we take dollars or use our own capital, we should pay a fair amount of interest. And what many people do is they use capital from a bank, they pay them interest. But how many times do we use our own capital, but we don't pay ourselves interest? And when we do that, what we're in essence saying is that the bank's capital is worth more than ours because they're willing to pay a premium for theirs, but we're not willing to pay it for ourselves.
Great point. That is actually page 21. What you were just talking on, that last little piece. In Nelson's book, he talks about economic value add and how capital has a cost.
Mm-hmm.
Really, really good page. That would be number 4 for me, right?
Mm-hmm.
That little piece in there, he talks about that. And then he also references an article that I think was in Fortune magazine.
Mm-hmm.
But great one. If you guys are doing research, go look that up. Maybe we'll share the article in the show notes. But my third one,
Cameron.
Anthony.
Cameron, I even forgot you were here. What was your third? What's this concept that you had to do a little more research? So the first 2 you kind of knew right off the bat, but this third one you took some time to narrow it down.
I did take some time, right? And I didn't want to take any of the easy ones, right? He who has all the gold makes all the rules, right? Stuff like that. That's pretty elementary. But this one on page 18, this one is one that I had actually circled years ago. And on page 18, what he talks about is everything you do in the financial world is compared with what everyone else is doing. There's actually 2 things that I always thought of when I read this. Number 1, if I'm being totally honest, is I used to compare myself to you all the time. So we were always very competitive, right? In IBC.
I'm not competitive.
Oh, man. Well, yeah, either am I. Right? So that was one of the things that I always struggled with is I would always compare myself to Anthony Fasso, and I was always striving to beat this guy no matter what we did. And even just on the financial side of it, right? And one thing that I always had to remind myself is that there's a pretty large discrepancy in age. Right? And so
you're trying to rationalize. I get it.
Exactly. And so I would need to remind myself that, listen, I can't compare myself to anybody other than, at least the way this is how I'd rationalize it, is I wouldn't compare myself to Anthony, a couple years older than I would, but I would think about it this way, is I would compare the strategy that I was implementing to everybody else that was my age. And the way that I would think about it is, man, if I implement this strategy am I going to get to my goal quicker than what everybody else is going to? And if I'm totally honest with you guys, if you guys are practicing infinite banking, is when you start infinite banking is you have to go slow to go fast. And so those first couple of years when you start infinite banking, man, you feel like you're going slow. But now it's starting to pick up. And I'll tell you what, I'm 14, 15 years into this thing. And now I feel like financially everything is going really, really fast. And so that is one thing that I would share with you guys. Page 18, everything you do in the financial world is compared with what everyone else is doing. And so you got to look at that, compare yourself to everybody else on a lateral level, right? And then just know that, hey, it's going to go a little bit slower, but you're going to catch up and you're going to pass them in the long run.
Well said, Cameron.
Thank you. Thank you.
And I would tell you, when I first learned how competitive you were, it was at a think tank that we went to. And you probably don't even remember this story.
Probably not.
But I don't remember the context of the conversation, but we were in with a group of other IBC guys and girls, and somebody came up and said, who could do more push-ups? And it wasn't even push-ups. It was where you're doing like a handstand and doing like those kind of push-ups.
Yeah.
And do you know what your response was? They asked who could do more. Do you know what your response was?
I do.
You did? What was it?
It was one more than Anthony.
It was, and I'm like, well, darn. Then I got to go last. But fortunately, we never pursued that.
I do remember that.
That's when I kind of learned, all right, this guy likes to compete.
Yeah, that was years ago, man. That was a long time.
And speaking of competing, you brought up some 3 good ones.
Yeah.
Ain't gonna lie. I mean, those were part of like my second phase or third, to be honest, but one of my favorites.
You got more? Great.
Yeah.
Let's hear it.
This one, well, you went first, so this is actually my favorite.
Oh, is it? Okay.
Yeah.
I stopped listening at one.
My favorite page is page 69. But I can earn a higher rate of return.
That's a good one.
Right. And I will tell you, when I first heard about this, again, similar to Cameron's story, nobody I really knew was actively doing this. So one of the first people I went to was my financial planner at the time. And you know what he said to me?
That's a terrible idea.
Yeah, because I can earn you a higher rate of return. But the thing is, he doesn't understand. IBC isn't about a higher rate of return. Particularly with IBC for investors is really all about where are you storing your capital? It's really, you store it in a bank, or you can store it in a policy, or there's other places to store it. But really at the foundation of infinite banking is the best place to store it is inside a whole life policy. And this is not an either or. And that's what he was thinking. Well, you could buy this mutual fund or whatever asset, and it's going to earn more than the policy. He's correct on that. Well, not quite, because sometimes we lost during those years. But over in theory, it's not about the rate of return on the asset, because with infinite banking, what we're trying to do is use that capital. We need to store the capital somewhere. And when we store the capital in a bank to buy an asset, then we're breaking the compound interest curve. By storing that same amount of capital inside a properly structured whole life policy, we never break the compound interest curve. No matter what, we're still buying the same asset. The question is, where do we store the capital to finance it? And in addition, with infinite banking, there is a loan interest. And that interest on the loan, when we use that to buy assets or to buy income producing assets, we can deduct the interest that we pay the insurance company against the profits of the asset. So the bottom line is, infinite banking is not an either or. Do I do life insurance, or do I buy a real estate or invest in my business, or whatever that or is? It doesn't matter. Infinite banking is an and asset. We store the money in life insurance, and we buy real estate, and we invest in the business.
Well said.
Thank you, Cameron.
Well said. You got any more? You good?
No, I'm good. I mean, I always got more,
Oh, I
but
know, yeah.
no, we're good.
Okay.
I think
awesome.
we're good.
Well, good. Well, listen, if you guys are brand new to infinite banking, or you guys are veterans, what we did today is we shared with you guys some of our favorite pages from Nelson's book, Becoming Your Own Banker. And so we hope that was of value to you. If you guys have some downtime, go back to Nelson's book and revisit those pages and tell us what you think. Share with us a lesson or two that you took away from those pages. Hope you guys enjoy this episode.
Make it a fantastic day.
Take care.
If you like this video, I know you're like this one. And if you want to learn how investors use infinite banking to increase their returns and lower their taxes, check this out. And if you have some questions and want to see if infinite banking is for you, hop on a discovery call with us. Link for that will be in the description.